Right, so want the inside scoop on Nvidia's latest earnings. We've got their Q4 and fiscal year 2025 report straight from February 26. We're going to be talking financials, market highlights, and even take a little glimpse into the future. Think of it as your express lane to understanding what's making Nvidia tick these days. Ready to dive in.
Let's get to it. What's really interesting here is Nvidia isn't just riding the AI wave, they're practically steering the ship.
Okay, so first things first, the big picture. Nvidia absolutely smashed their own records. We're not talking about a little bump here. We're talking record-breaking revenue, both for the quarter and the entire fiscal year.
Yeah, the numbers are pretty eye-popping. In Q4 alone, they pulled in a staggering $39.3 billion. That's a 78% jump compared to last year. And for the full year, hold on to your hats, $130.5 billion. That's a 114% increase. They've basically doubled their business in a year.
Wow, that's not just growth, that's a full-on explosion.
Yeah.
So what's driving this rocket ship? I know their CEO, Jensen Huang, is super pumped about something called the Blackwell architecture.
Right. Blackwell is the engine powering this growth. It's their latest and greatest chip technology, specifically designed to handle the massive demands of AI. Think of it as the brains behind the AI boom.
So it's not just about general computing anymore. It's all about AI. And where are we seeing this AI muscle flex the most?
Look no further than their data center segment. This is where the real magic is happening. Data centers are basically the backbone of the internet. And Nvidia is becoming the go-to supplier for the chips that make these data centers hum, especially when it comes to AI.
So give me the numbers. How much of this mega revenue is coming from data centers?
Data center brought in a whopping $35.6 billion in Q4 alone. That's a 93% jump compared to last year. But here's the kicker. That $35.6 billion represents almost 90% of their total revenue for the quarter. That's how much their business has shifted towards AI.
Whoa, that's a massive shift. So they're not just dipping their toes in the AI pool. They basically cannonballed in.
Exactly. And it's a smart move. Think about it. All those large language models, recommendation engines, the generative AI tools everyone's buzzing about, they all need serious computing power. And Nvidia is providing the picks and shovels for this AI gold rush.
So who are their biggest customers in this data center world? Are they selling to every tech company under the sun?
Their biggest clients are actually the cloud giants. Companies like AWS, Google Cloud, Microsoft Azure, even Oracle Cloud is getting in on the action. These are the companies providing the infrastructure for a huge chunk of the internet, and they're turning to Nvidia to power their AI ambitions.
Makes sense. Those companies need massive amounts of computing power, and they probably don't want to build it all themselves. It's easier to just buy the best from Nvidia.
Right, and it's working beautifully for Nvidia. Cloud service providers actually made up half of their data center revenue. That tells you just how powerful this trend is. Cloud-based AI is becoming the norm.
Okay, so we've got Nvidia riding the AI wave, dominating the data center market. What about their bread and butter, the gaming market? Weren't they known for their gaming graphics cards?
They still are a major player in gaming. But the story there is a little different. In Q4, their gaming revenue actually dipped compared to the year before.
Really? So is the gaming market shrinking? Are people not as interested in high-performance gaming anymore?
Not quite. The slowdown is more about supply than demand. Nvidia is actually having trouble keeping up with how many people want their high-end graphics cards, specifically their top-tier Blackwell chips and the older Ada architecture. Gamers want them, but Nvidia can't make them fast enough.
So it's like trying to get a Taylor Swift concert ticket. Everyone wants one, but there just aren't enough to go around.
Exactly. And that limited supply is putting a bit of a damper on their gaming revenue in the short term. But here's the silver lining. For the full year, gaming revenue was still up 9% thanks to their popular GeForce RTX 40 series. So while they might be facing a temporary supply hiccup, they're still a major force in the gaming world.
Okay, that makes sense. So they got data center booming, gaming holding steady despite some supply issues. What other markets are they making waves in?
They're making some exciting moves in professional visualization, which is all about using powerful graphics for things like design, simulation, and engineering. Think architects designing futuristic buildings with AI help, or engineers running complex simulations in a fraction of the time.
Ah, so this is where those fancy Ada RTX GPUs come in.
You got it. And it's not just about making things look pretty. These AI-powered tools are changing how professionals work, making them more efficient and opening up new creative possibilities. It's like giving them superpowers.
That's pretty cool. What about other areas? Are they sticking to just data centers and gaming?
Not at all. Another big win for Nvidia is in the automotive sector. Their self-driving car platforms are really taking off. In fact, their automotive revenue more than doubled year over year in Q4.
Wow, self-driving cars. That sounds like a whole other deep dive. But it looks like we've got a lot more to unpack with just these earnings.
We do. And that's where we'll pick up in part two. We'll take a closer look at the financial details, see how their different segments are performing, and understand what these numbers really mean for NVIDIA's future.
Sounds good. I'm already hooked.
Welcome back. Let's dig into the financial engine room of NVIDIA's earnings report.
Now let's get down to brass tacks. Where do we even begin with all these numbers?
Well, how about we break down their revenue by business segment, their compute and networking segment, which houses most of their AI-related products, raked in a massive $116.1 billion in revenue for the fiscal year 2025. To put that into perspective, that's a 145% jump from the previous year.
Hold on, 145% increase. That's not just growth. That's like winning the lottery and then investing it wisely.
Yeah.
It seems like their bet on AI and accelerated computing is paying off big time.
Yeah, it's more than just the hardware, though. It's about the entire ecosystem they've created around it. The software, the algorithms, the services. NVIDIA is providing a complete package for companies looking to harness the power of AI.
So it's not just selling chips, it's selling the whole enchilada. And speaking of enchiladas, how much of that delicious revenue pie is coming from their data center platform?
Their data center platform,
Yeah.
which powers everything from those massive language models to generative AI applications. Brought in a colossal $115.1 billion for the year. That's a number most companies only dream of.
It's mind-boggling that one segment can generate that much revenue. But I'm curious, within data center, what's the real star performer? Is it the hardware or the software side of things?
It's interesting you ask that. While their networking solutions are doing well, the real engine of growth within data center is their compute revenue. This refers to the actual processing power, the brains of these AI systems. And get this, their compute revenue skyrocketed by 162% year over year.
Okay, so they're not just selling the cables and connections. They're selling the powerful processors that crunch the numbers. It's like they're selling the shovels and pickaxes during a digital gold rush. And everyone wants a piece of the action.
That's a great analogy. NVIDIA is providing the essential tools everyone needs to participate in this AI revolution. And they're reaping the rewards.
Okay, let's zero in on Q4 specifically. What were some of the key financial highlights for the quarter?
Well, as we mentioned earlier, their total revenue for Q4 hit an all-time high of $39.3 billion, up 78% from the previous year. But what's intriguing is how this growth is distributed across their different platforms. It wasn't a case of all boats rising with the tide.
So there were some clear winners and losers, some segments riding high and others lagging behind.
Exactly. Data center was the undisputed champion, with revenue soaring 93% year over year to a mind-blowing $35.5 billion. That's just astronomical.
Right, 93% growth. So data center isn't just leading the pack, it's practically lapping the competition. It must make up a huge chunk of their total revenue, right?
You're absolutely right. That $35.5 billion represents almost 90% of their total revenue for the quarter. And guess what drove this phenomenal growth? It was their compute products, especially the Blackwell architecture we talked about earlier.
So Blackwell is the golden goose laying all these golden eggs. But it wasn't always this way, right? It's a relatively new product.
It is. Blackwell was the fastest product launch in NVIDIA's history. And in its first quarter on the market, it generated a whopping $11 billion in revenue. That's unprecedented.
That's remarkable. But I'm also curious about the other side of the coin. You mentioned some segments didn't fare as well. Which ones took a hit?
Well, while gaming is still a significant part of their business, their revenue in that segment actually dropped 11% year over year in Q4.
Interesting. So is it a case of gamers losing interest? Are they not upgrading their graphics cards as often?
It's not about lack of demand. It's about limited supply. They simply can't manufacture their high-end GPUs fast enough to meet the demand, especially for their top-of-the-line Blackwell and the slightly older Ada architecture chips.
So it's that Taylor Swift concert ticket scenario again. Plenty of eager buyers, but not enough product to go around. It seems like a good problem to have in a way. But it's still impacting their bottom line.
Exactly. And this supply crunch isn't just a logistical headache. These chips are becoming increasingly complex and expensive to manufacture, which is putting pressure on their profit margins.
So even though they're selling a ton of product, Their profitability might be taking a slight dip. Is that what we're seeing in their financials?
You're spot on. Their gross margins, both GAAP and non-GAAP, were down in Q4 compared to the previous year and the previous quarter. This basically means that for every dollar of revenue they bring in, they're keeping slightly less profit.
So what are they doing to address this margin squeeze? Are they cutting costs?
Yeah.
Raising prices?
Well, they're certainly not holding back on investing in research and development. In fact, their operating expenses are up across the board, mainly due to hiring more engineers and the cost of developing all these new products.
That seems like a bold move, especially with all the talk of economic uncertainty. Aren't they worried about overspending?
It's definitely a calculated risk. They're doubling down on their belief that AI is the future of computing. They're not just trying to keep up with the AI revolution. They want to lead it.
It's a bold strategy, Cotton. Let's see if it pays off. But speaking of paying off, let's talk about their cash flow. They generated $16.6 billion in cash from their operations in Q4. That's a serious pile of cash. What are they doing with all that money?
They're investing it strategically. First, they're pumping money into inventory to ramp up production of their Blackwell chips and try to address that supply shortage. Second, as we discussed, they're pouring resources into research and development, constantly innovating and staying ahead of the curve.
So they're playing the long game, investing in the future, even if it means sacrificing a bit of profit in the short term. But they're not forgetting about their shareholders, right? Companies need to keep their investors happy.
Absolutely. They spend a significant amount, $7.8 billion on stock buybacks in Q4, and they also paid out $245 million in cash dividends. They're trying to balance investing for growth with rewarding their investors.
It's a delicate dance, but they seem to be managing it well. Now let's look ahead. What's their outlook for Q1 2026? Are they expecting this incredible growth to continue?
They are incredibly optimistic, projecting $43 billion in revenue for Q1 2026. That would mean continuing on this explosive growth trajectory. And here's the most interesting part. This projection is almost entirely driven by their data center business. The demand for their Blackwell architecture from cloud providers and other large companies just keeps growing.
So no signs of the AI boom slowing down anytime soon. It sounds like Nvidia is in the perfect position to ride this wave for a long time.
That's the prevailing sentiment. Many analysts believe we're still in the early stages of this AI revolution, and Nvidia is poised to be one of the biggest winners.
Now, I've noticed that they use a lot of non-GAAP measures in their financial reporting. Can you break that down for me? What are those, and why do they use them?
That's a great question. Non-GAAP measures are basically adjusted financial metrics that exclude certain items that the company believes don't reflect their ongoing performance. They might exclude things like stock-based compensation, acquisition costs, or gains and losses from investments that aren't part of their core business.
So it's a way of presenting a more streamlined view of their profitability, focusing on their core operations.
You could say that. They argue that these non-GAAP measures give investors a clearer understanding of the underlying trends in their business.
But isn't there a risk that excluding certain costs could make their numbers look a little too rosy? Couldn't that be misleading for investors?
That's a valid point, and it's important to remember that non-GAAP measures shouldn't be considered a substitute for GAAP, which is the standard accounting framework. Investors should always look at both GAAP and non-GAAP numbers to get a complete picture.
So what are some of the key differences between Nvidia's GAAP and non-GAAP numbers? Can you give me some concrete examples?
Sure. For Q4, their non-GAAP gross margin was 73.5%, half a percentage point higher than their GAAP gross margin. This difference is mainly due to excluding stock-based compensation and acquisition-related costs.
And what about operating expenses? Do those numbers differ significantly between GAAP and non-GAAP?
They do. Their non-GAAP operating expenses were $3.38 billion, which is considerably lower than their GAAP operating expenses of $4.69 billion. Again, the primary reason for this difference is the exclusion of stock-based compensation.
So their non-GAAP numbers paint a slightly more optimistic picture of their profitability. It sounds like investors need to do their due diligence and understand both sides of the coin.
Absolutely. It's crucial to understand the context and make informed decisions.
Okay, we've delved deep into the financial details of Nvidia's report. What are the key takeaways from this deep dive into their numbers? What stands out to you?
Here's what I find most significant. First, their growth is primarily fueled by their data center business, which is reaping the benefits of the exploding demand for AI. Second, their Blackwell architecture is a runaway success, driving record revenue and solidifying their position as the leading provider of AI chips. Third, they're facing some margin pressure due to the rising complexity and cost of producing these advanced chips. And fourth, they're aggressively investing in research and development to maintain their lead in this fast-evolving field.
So it's a bit of a mixed bag. They're facing some challenges,
Yeah.
but the overall picture is overwhelmingly positive.
That's a fair assessment. They're making strategic moves to capitalize on the AI revolution, but they also need to navigate these challenges effectively.
Well, I'm eager to see what the future holds for Nvidia. They're clearly a company to watch.
Me too. And that brings us to the end of part 2. In the final part, we'll step back and explore some of the broader implications of NVIDIA's emergence as an AI powerhouse, looking at both the incredible opportunities and the potential risks that come with such dominance.
Sounds fascinating. Can't wait. Welcome back for our final part of this Nvidia deep dive.
Yeah.
We've gone through their financials, their strategic moves, and they're all in bet on the future of AI. Now let's zoom out a bit and look at the bigger picture. You know, Nvidia has become practically synonymous with AI these days. But what does that actually mean for the rest of us, for the world?
That's the billion-dollar question, isn't it? NVIDIA is not just selling chips. They're essentially shaping the future of a technology that's rapidly changing every single industry.
Yeah, it's kind of wild to think about. Okay, so let's play a little game of what if here. What if Nvidia's tech becomes even more ubiquitous than it already is? What are some potential downsides we should be watching out for?
One concern that comes up a lot is this idea of power concentration. You know, when one company controls such a crucial piece of the AI puzzle, it naturally raises questions about fair competition.
Right. Could they use their position to kind of stifle innovation from smaller companies? Or even steer the whole direction of AI development in a way that benefits them more than others?
It's a valid concern for sure. Regulators and policymakers are already starting to grapple with these questions, especially as AI becomes more and more intertwined with our daily lives. It's going to be a real challenge finding that balance between encouraging innovation, but also preventing monopolies.
Yeah, it's a tightrope walk, for sure. Another thing that's been on my mind is this whole issue of job displacement. As AI gets more and more sophisticated, is there a chance it'll start automating away jobs that humans are currently doing?
That's a topic that sparks a lot of debate, and there are no easy answers. Some experts believe that AI will ultimately create more jobs than it eliminates, while others paint a much more pessimistic picture. The truth is, it's probably too early to say for certain.
Yeah, we're kind of in uncharted territory here.
Yeah.
But it's definitely a conversation we need to be having, both as individuals and as a society.
Yeah.
You know, how do we prepare for a future where AI plays a much larger role in the workforce? How do we make sure everyone benefits from this technological shift?
Yeah.
And not just a select few?
Right. It's not just about the tech itself. It's about how we manage the societal impact of that technology. We need to invest in education and training programs that equip people with the skills they'll need to thrive in an AI-powered world. We can't just assume everyone will adapt seamlessly. We need to provide the resources and support to make that transition happen.
Totally agree. Okay, so where do we go from here? What are some practical steps we can take, both as individuals and as a society, to ensure that AI is developed and used responsibly?
Well, first and foremost, we need to foster open and honest conversations about both the potential risks and the incredible benefits of AI. We can't just bury our heads in the sand and pretend it's not happening. We need to educate ourselves about how these technologies work and what their implications are.
So no more sticking our fingers in our ears and yelling la la. We need to be informed and engaged citizens.
Exactly. The future of AI isn't something that's going to be decided by a handful of tech companies or government officials. It's something we all have a stake in, and we all need to participate in shaping it.
I like that. What about the role of government and regulation? Do we need stricter rules to govern the development and use of AI, or would that just stifle innovation?
That's a debate that's happening right now, and there's no simple answer. Some argue that excessive regulation could hinder progress, while others believe that some guardrails are necessary to prevent unintended consequences. It's a tough balancing act for sure.
So how do we find that sweet spot? How do we encourage innovation while also protecting our values and ensuring that AI is used ethically and for the benefit of all?
It's going to require a lot of collaboration and dialogue between policymakers, industry leaders, researchers, and the public. We need to work together to define the ethical boundaries of AI development and make sure those boundaries are respected.
Collaboration is key for sure. And what can we do as individuals, aside from staying informed? Are there any concrete actions we can take to make a difference?
Absolutely. We can demand transparency from the companies developing these technologies. We can ask tough questions about how their algorithms work,
Right.
what data they're using, and what steps they're taking to address potential biases or harms.
So we have a voice,
Yeah,
and we need to use it. We can vote with our wallets, support companies that align with our values, and hold those that don't accountable.
exactly. We're not just passive bystanders in this technological revolution. We have the power to shape it.
Well, that's a pretty empowering thought. So as we wrap up our deep dive into NVIDIA's earnings report, what's the key takeaway? What should our listeners be thinking about as they go about their day?
I think the most important takeaway is this. Nvidia is a company at the forefront of a technological shift that's going to have a profound impact on the world. Their financial success is just one part of the story. The bigger story is about the immense power of AI, the ethical challenges it presents, and the responsibility we all share in ensuring it's used for good.
That's a lot to ponder for sure. Any final thoughts for our listeners before we sign off?
Yes, as we navigate this exciting and sometimes uncertain world of AI, let's remember to stay informed, stay engaged, and above all, stay hopeful. The future isn't predetermined. It's something we create together.
That's a great note to end on. Thanks for joining us on this journey of discovery. Until next time, keep exploring, keep questioning, and keep learning.